All right, ladies and gentlemen, welcome to the Vancouver Resource Investment Conference 2021. I am Jamie Keech from Resource Insider, and today I am sitting down to talk to the CEO of MEG Silver, George Paspalas. We're going to talk about what they're doing on their operation in Mexico and the silver space and all the things you guys want to hear about. So, George, thanks very much for taking a few minutes out of your day to sit down and chat.
Oh, it's a pleasure. Morning, Jamie, and hello, everybody.
All right. So, at Resource Insider, we've been investing in a lot of silver projects lately. There has been what I would consider a bit of a mania for exposure to silver right now. And there are few better opportunities for that in a lot of ways than MEG Silver. For people that have never heard of MEG before, who have no idea what you guys are doing, can you give us the 30,000 foot view of what it is, what you're doing?
Sure, Jamie. MEG, we're a 44% joint venture partner in the Juanicipio project in Mexico. It's a project that we owned. We IPO'd the company with the Juanicipio project. We had a disruptive geological theory. That's an important line to remember during this interview, a disruptive geological theory, thinking differently about this area. And we came on the ground in 2003, and the very first hole we drilled into the Juanicipio property discovered the Juanicipio vein. We've now found a vein system about a kilometre away from Juanicipio, the Valdecañas vein system. And this represents probably the highest grade, large deposit, undeveloped silver property in the world. We, Fresnillo, our partner, who have three neighbouring operations adjacent to the joint venture ground, earned into a joint venture in 2005. And hence that's where we became 44% non-operator. They're the operator. And so you said 30,000 foot level, Jamie. Here you have an incredible resource, right? The first 12 years of mine life is the bonanza zone, the average silver grade 600 grams per tonne. There's a gram of, almost a gram and a half average gold, lead and zinc in that bonanza grade as well. So we have incredible metrics. If you look at this on the desktop on a spreadsheet, here's a project that's got a 15% after-tax IRR at $8 silver. Right?
$8 silver.
There's no at $8 silver. A lot of assets in this industry struggle. This just doesn't keep the lights on. It makes good money.
So what are you looking at $25 silver?
Oh, it's phenomenal. It's a 50-60% after-tax IRR and long life, right? Very long mine life.
What is the scale? What is the resource you've wrapped around this today, or the reserve, should I say?
Yeah, sure. The resource we have is as per our 2017, December 2017 PEA. And that shows about 24 million tonnes. It shows more than a 19-year mine life. Now, we haven't updated the resource since then because, we're focused on the mine getting built. Fresnillo, our partner, have. Right? We continue to drill around this Valdecañas system. And I can't quote what they quote, but I can tell you if you go and have a look at their website or their annual report, you'll see a number significantly higher than the 24 million that we have. And so we think of this in MAG as a generational asset, extraordinarily high margin. Now, if we come away from that spreadsheet and look at reality, the operator, Fresnillo, have been operating in this area of Mexico, which is now the most prolific silver district in the world. 1 of every 10 ounces of silver on the planet has come from the Fresnillo district. They've built 2 flotation plants on this same vein, and they've operated in this area for 135 years. And so you have this de-risk scenario to something that looks pretty good on a spreadsheet.
Yeah.
And then on top of that, there's one more, and there's more.
Okay.
On
All
top
right.
of that, right, since August of last year, we've started to bring mineralized material out from underground, and 2 days a month, that's going through the Fresnillo plant. And that's giving us a lot of information about its metallurgical response, because the Fresnillo plant is a similar flow sheet to the one we're building in this backdrop behind me.
And what's the distance between that?
6 kilometers.
It's 6 kilometers. That's it.
Yeah. So, the material comes up. There's a nice video on our website that shows the material getting loaded, going across to the Fresnillo plant. Now, that's going to really de-risk our startup, even though it was pretty de-risked because they've been mining the same material since 2008 on the same vein for the Zacatecas operation. But we also are earning cash. And so you'll see in our financials, we're going to start to show $4-5 million a quarter is coming to MAG from this processing of the material through the Fresnillo plant 2 days a month. So it's a pretty unique scenario where, forget lab work, you've got a real live plant that's processing material, and you're making money to offset the capital we have to send down to finish the build. So that's a wonderful story.
So for viewers at home that maybe aren't as familiar with the process of a mine setup, I guess the reason you're saying that this is being de-risked is because you're sending your ore over there. It's getting processed in a very similar plant to what you're building, and you're going to be able to work out, in my understanding, it's right, the metallurgical hiccups that are inherent in any startup operation, and optimize that plant, maximize recovery, that sort of thing. So,
hang on.
I guess in theory, when you guys start up, and I think I have it here, in the end of next year when you guys start operating?
End of this year.
End of this year, sorry, yeah. When you start up this year, you'll be able to kind of hit the ground running and not, hopefully, sort of have these things that most people experience.
That's exactly right. And in fact, that IRR I'm telling you is predicated on the numbers from our PEA, which assumed a 3-year ramp up to nameplate capacity. We're now saying by the end of the year we'll be at 85%. So it increases the IRR substantially.
What makes this interesting to me, as an engineer, is you have the guys at Fresno as your operating partners who have been, I assume, mining and processing almost identical ore for how long now?
Well, on this particular vein, they've been processing the same vein since 2008. And in 2014, they doubled the capacity. They put a second plant on. And that's the world's largest silver producer at the moment, the Zacatecas mine. But a lot of these veins are similar in this area. And they've been mining those since for 135. In fact, the first epithermal vein that was ultimately mined down to what's called a fluid upwelling zone, which is what makes this Valdecañas so unique, started mining in 1552 and was finished mining in 1934. So there's been a lot of mining and there's a lot of history about these epithermal systems in the Fresnillo trend.
So with your deposit 6 kilometers away, why build a new plant? Why not just continue? Is it because of capacity over there, or what are the issues?
Capacity is an issue, but again, if you have a look at our presentation on the website, you'll see a map of the joint venture ground. Jamie, we've only explored 5% of the surface area of the joint venture ground, and we can see other very prospective targets. So we don't believe the plant we're building, if we're having this interview in 10 years' time, I bet you that's a bit bigger than what it is now.
All right. So you mentioned at the beginning of our conversation that this was discovered on a disruptive geological theory.
Yeah.
What does that mean, and what was that theory?
Essentially, in sort of straightforward terms, the veins on the joint venture property were occurring lower than any of the veins ever seen before in the area. And so
that's at a greater depth, right? What we mean by lower? Yeah.
About 150 meters deep. In fact, this is a nice story. So Peter McGaw, our chief exploration officer, he came on the property wanting to drill a deeper hole to test structure and just to prove his theory up. And he did that in 2003, and hole number one was discovery, which is unheard of in exploration generally. Okay. Now, as Fresnillo learned in the joint venture, and we found the Valdecanes deposit, they came back down on the southern end of where their properties were, where they'd explored before, and they sunk holes 150, 200 metres deeper, and they found 600 million ounces down there. Right. So this is a very...
Was that based on Peter's theory?
Right.
Oh, man. So he's made them a lot of money, I guess.
They've made us a lot of money. So it works, right? It's a partnership. And where I said, hang on to this phrase, disruptive geological theory, because ultimately I hope we're going to talk about our exploration asset in Utah that we have now. It's the same approach.
All right. Well, let's talk about what's going on in Utah. Let's hear about that, because, I'm looking at your share chart right now, and you guys are a $2.2 billion company right now. You've got almost a $25 share price. You've been on a great tear over the last several months. There's going to be a lot of investors watching this, asking themselves, am I too late? Is there still upside in mag? Why buy now? So maybe what's going on in Utah might play into that a little bit.
I think it does. I think the fact that we're getting towards the final stages of construction of Juanicipio, that you can see behind me there, coming into cash flow, people understanding how much cash this property will make at 23, 25, let's hope $27 silver. I think there's upside in the share price for that. But there's also upside in the share price for this Deer Trail property. It's important to the existing MAG shareholders, and I think to any shareholder, to understand that the Utah opportunity, first of all, it's in Utah. So it gives us a bit of geopolitical diversity outside of Mexico. It's in a very mining-friendly jurisdiction, and we control the asset 100%. And our DNA, I'm like you, I'm an engineer, I'm not a geologist, but our DNA in the company is successful exploration. And so here we go again. We're coming into this property called Deer Trail. We've been working on that for over 4 years to consummate a deal with some private owners, and we announced that in September of this year. And the market responded pretty well to it, right? They saw that, wow, this is good diversity. It's a second leg on the MAG stool, right? As good as Juanicipio is, it is a single asset. And here comes something else for MAG to work on now and hopefully develop into the same sort of value creation that Juanicipio is. There's historical mining in this Deer Trail area. Over 100 years. Deer Trail sits on the same fault that separates the Colorado Plate from the Great Western Plate in the western US, where Bingham Canyon sits. Right? So, there's a part of our thesis here that this is a Bingham Canyon lookalike. And the reason for that is technical, not wish. We have Bingham Canyon is one of the most prolific copper porphyry mines in the world. It's one of two man-made structures you can see from outer space.
Is it the biggest mine in the world or the deepest mine, open pit mine in the world? It holds some sort of record, right? It used
to. I'm not sure if maybe one of the Chilean open pits is equipped that. But before Bingham Canyon was this incredible copper porphyry, it was a high-grade silver mining operation that was processing these carbonate replacement deposits that come off the center hub of the porphyry. Right? And people only know Bingham for what it is today. If you go back a bit more in history, it's going to be, if we have success at Deer Trail, looking for these high-grade, silver-rich mantos. That's what Bingham Canyon was before they mined the porphyry. And again, there's two tape zooms on our website on Deer Trail. There's the sort of coming out video or webinar in September, which is a bit of an overview. And then in November, there's a very detailed technical section. And we have this hub and spoke model. The hub is the porphyry. And there's pretty good surface imagery and geochemical analysis that shows we have the potential for 2 porphyry hubs here. What we're looking at, though, is on the spoke. Right, radially out from these porphyry centres sit these high-grade mantos. And so we've been drilling there now. We're on our first hole, and we'll be drilling, say, for the first half of this year. Now, again, we're very disciplined about our exploration. Our first drill program is drilling to prove up our model. We're not drilling for assays. We're not drilling for bling. We want to make sure the geological model we have here, because this is a district play, we want to make sure that the geological model is valid. So a lot of the drilling we're doing here now is technically focused. And so we're telling investors and the local community, we may be popping champagne corks in mag because we've hit 100, 200 metres of red wall limestone, a perfect receiving unit for a carbonate replacement deposit. And we can see a molar shale cap that's encapsulated all the minerals in this structure, all this stuff, but there'll be no bling assays. They'll come later. Once we work out the plumbing, they'll come later.
So you're drilling for structure, you're drilling for the geology, and then once you get that information, you'll be able to refine your model, dial in the drill program, and then hopefully be able to find that the grade you're looking for.
Absolutely. Now, the property has a 2.5 kilometre ramp, added into the side of the hill. There's been an operating mine there. Now, we have stopes there where people have walked away with high-grade rock sitting in the stopes, hasn't been recovered. We believe this is right at the top of the system where mineral has escaped through cracks in this shale cap. And a lot of the work for the 100 years before has been at the top of the system, right at what's called the distal end, right at the stuff that's at the end of the mineralisation process. We want to go deep, and this is the disruptive theory. This came from somewhere, right? Let's go and find out where it came from. There's only one deep hole ever sunk around the Deer Trail system, and they didn't even assay it. Okay?
Really?
Yeah. So we have, and there's a 30 centimetre section in there that's got 3% molybdenum. Right? There's huge intercepts of highly altered sericitic material, which means you just missed the porphyry.
So I was going to ask, because the molybdenum, it implies it could potentially be a copper porphyry there. Is that right?
Absolutely. And so what we think, with all that action around the copper porphyry forming, right, there were other minerals displaced through the carbonate that form these mantos. Yeah. And that's what we want.
Okay.
So we're pretty excited about this. Yeah.
Well, let's touch briefly on what kind of financial situation MAG is in right now. I'm assuming you don't need to be going back to the market raising money anytime soon at this point. With your cash flow positive, you're well financed. You've got a strong JV partner. Can you give us an overview of your current financial situation?
Sure. We got $142 million of cash at the end of September. Last quarter we reported. If you look at the remaining capital to build that plant, we've got a 20 odd mil, call it buffer to that. Mm-hmm. The indications we have at the moment is that, we're going to be pretty well on target for the capital spend. We're not factoring in the cash we're getting from this 2 days a month of processing. We believe we're pretty solid, right, on the balance sheet. The spend on the Deer Trail at the moment is quite low. We've crafted a 10-year earning, which is more back-end loaded to when Juanicipio's in cash flow. Mm-hmm. So balance sheet-wise, Jamie, we are very comfortable.
Okay. Yeah. Well, I know we've talked a lot about this, or we've talked about a lot of things throughout the interview, but for investors or potential investors that are watching this, that are interested in getting exposure to silver, that are interested in being involved in MAG, What sort of things do they have to look forward to over the next year? Can we recap what the potential catalysts are down the road?
Okay, so first of all, you're going to get Juanicipio that's going to have, call it a side stream cash flow, which gives us a good buffer for the build, gives us good information for the ramp up of our property. And come the end of the year, we're going to be putting meaningful tons through that plant. So
through your own plant, though.
Our own plant.
Right. Yeah.
Thanks for qualifying that. and what that means is, of course, immense cash flow to MAG, the potential for dividend payments to come out of there. But exploration is ongoing on the joint venture, right? And in the future, we expect to have more discoveries. We're hoping to find another upwelling zone.
Okay.
Right? Within the current upwelling zone of Valdecanes, there is the potential to expand that with time. So you may find, I think when Juanicipio comes online, it's probably going to be the largest silver producer in the world. But in short order, there is the potential to expand that. We're currently sinking an internal shaft from where we're mining at the moment. That's the main mining level. We're sinking the internal shaft down into the deeper mineralisation with the view to open up a second mine within the mine, removed. We've oversized
you'd have the shaft from surface and then over or down another shaft that goes down. Yeah,
a ramp from surface.
From surface.
Yep, you're right. I didn't tell you. So that's a good assumption you made. Ramp from surface down to the mining level now. There's two crushers and the conveyor belt that'll take the material out. We've oversized that system.
Okay.
We're now sinking a shaft down to the lower level. So in maybe 4 years' time, you have a second mine in Valdecanes that's deeper. That gives you incredible mining flexibility. Does that mean you expand? Probably. Right. We've found 3 structures that run perpendicular to the 3 Valdecanes and sister veins that we have. So we're exploring those. Do we expand the mine laterally as well as vertically? So Juanicipio, as it stands at the moment, is an incredible asset. But I think there's a strong chance, this is a forward-looking statement, but I think that there's a strong chance, and the partner has said this publicly, that in the future it will be expanded because of the mineral endowment we already have, let alone what we're likely to find. So I think that's value creation for a shareholder along the way. Expansions here can be funded out of that cash flow. Now, as we drill in Utah, let's hope we really put a good second leg on that stool. And then we can replicate the model we have at Juanicipio. Do we bring in a world-class operator, a deer trail, to build that out? Should we go forward? Or do we want to do it ourselves? We've got lots of flexibility to do that. So the key to our future is a substantial cash flow from Juanicipio under most silver price scenarios you can think about that can fund our exploration expertise to try and do another one. And then maybe there's another one.
Well, that's a pretty good pitch, George. We're coming up on time. So if anyone wants to learn more, should they go to megsilver.com and reach out to you guys there?
That's the best thing. And Michael Kerlook, our VP of Investor Relations, and myself will always take calls from people. There's a lot of information on the website. So we'd ask you to look at that first. And if you've got follow-up, come to us. We love this story. We think it's a unique story and we like talking about it.
All right. Well, thank you very much for taking the time today, George.
Pleasure, Jamie. All the best.